Tim. We talked about Germany already a little bit, and now we have Dirk, who runs a German business since the beginning of this year. I think he has Magenta in his blood. He ran the German wholesale business in the past, and he is, I would call him the father of the contingent model, which I think most of you know. And ran the German sales, and then he ran away to Canada to lead the consumer business of Rogers. So he is a seen cable operator from the inside, which I think is quite a good piece of know-how to have. Now he's back, and this is wonderful. So Dirk, please, the stage is yours.
Thank you, Hannes, and I'm very happy to be here, talk to you, and to be back in Germany. And with Magenta, I indeed have a big portion of Magenta blood. I've been out of the business the last 3 years, but I've actually joined Deutsche Telekom in 2002, so I've quite a history in the company, and I'm very excited to be back here in Germany, not only because I'm seeing that actually the market and Deutsche is back to growth, but also to talk to you about the opportunities that we have going forward and how we approach issues like, for example, fiber rollout, and I'll come to that as part of my presentation. So let me just give you a couple of the key messages about Germany that we're going to talk about in the following presentation. And I think, first and foremost, we operate in a market with stable growth. And that's very important. Coming from Canada, which is a very fortunate market in growth, I can tell you it's a good environment to work in a growth environment. And again, Germany has returned to growth, and we are very well positioned in this market. Secondly, we intend to extend our lead in customer experience. In B2C, we want to expand convergence, drive our more for more approach in mobile, leverage our superior mobile and broadband networks, and last but not least, also use our best-in-class service to drive lower churn. In B2B, we want to further extend our leadership in that area, building on strong ICT solutions. And fixed line, as Tim said earlier, we will deploy super vectoring and then reallocate our CapEx for an FTTB and FTTH rollout to drive revenue growth and address specific political concerns that we have. And we propose, as part of that, a fair wholesale model, access model to that infrastructure. Thirdly, in mobile, we will extend our mobile network leadership. Tim mentioned this morning we won again Open Signal report on German mobile coverage by far, and we will build the foundation for a 5G leadership in that area. And last but not least, we will drive efficiencies through automation, leaner operations, a retirement of platforms, and also benefiting from finalizing our peer-leading IP migration. And we're confident that we will achieve 750 million of annual savings, indirect cost savings by 2021. So let's do a review first of where are we, what have we achieved in the past years. And as you can see here, we've achieved our revenue goals. Looking at mobile service revenue, we're well on track to hit the growth here, both on our wholesale revenue, stabilization on our wholesale revenue, overall the stabilization of our revenues over the past years. The one area where we fell slightly short with our broadband revenues, which are slightly behind the anticipated growth that we've achieved there. But again, if I look at the last year, the momentum that we have gained there is very, very good. Our EBITDA performance is slightly worse than expected. This is due to a weaker margin performance, mainly driven by the problems that Tim also mentioned earlier about the IT transformation and about driving efficiency out of our operations through better support on our IT. But based on our 2018 guidance, we will deliver EBITDA growth at the lower end of our 1% to 2% guidance range. Because of higher than expected CapEx, however, and that was mentioned also before, we have not reached our adjusted cash contribution goals. Instead, we reported a negative CAGR here. The main reasons here are greater than expected public subsidy programs as part of the fixed network rollout and some regulatory delays in our nearshore vectoring deployments. And we invested also successfully in our mobile networks following the 2015 spectrum auction. Now, looking more specifically at some specific drivers, mentioned that mobile service revenue having grown on a CAGR of 1%, again, with a positive dynamic in the late 2017 and now into early 2018. Broadband revenues also with a CAGR of 1.1%, and specifically here now regaining a bigger share of the net adds. This is the net add share in 2017. Again, if you look at the end of 2017 and trends in 2018 already, those net add shares are even better than the ones that you're seeing here on the chart. And last but not least, also our wholesale business. In many areas, actually a business of shrinkage. For us, it's a source of growth. We've been able to grow our wholesale business over the years by 1.2% on CAGR. All that then delivering into, as I mentioned earlier, an EBITDA growth of 0.8% annually in that period. And again, with a strong exit, as you know, in 2017. If I look at the German market overall, what's our projection going forward? Where do we think that market will go? And as I said in the summary before, we believe it's a healthy and stable market environment that will enable growth. And looking at wireless, we believe that in wireless there will be growth driven, by comparatively low penetration rates with other markets, and also relatively low data utilization, which right now is around 1.9 gigabytes per user per month. So we can grow in the mobile area through data monetization and increased penetration. On the broadband side, again, we also believe there will be growth coming, both from, the broadband penetration rates was on the broadband. The 78% penetration rate on broadband, obviously not on mobile, where we're north of 120%. 78% growth rate in a penetration rate in broadband, so higher broadband penetration will be one of the drivers. And secondly, migration to higher broadband speeds. As part of our expansion of our networks, we will be able to provide much higher speeds in areas of low or medium speed today, and that again will be a source of growth for us. That all in a stable macroeconomic environment, GDP growth forecast to be about 2.3%, and also in a more stable regulatory environment. And one good sign there is, for example, that the important VDSL bitstream access rate has now been confirmed on this level until 2022. So we have a stable anchor rate in the wholesale business for the next years, where we'll support this growth that we're seeing on the broadband business. Now, and we are uniquely positioned in this business. Tim mentioned earlier, our brand is second only to BMW in the German market. We're very, very strongly positioned. We're market leader in wireless. We're market leader in broadband. We're market leader in convergence. We have 3.6 million customers. We actually invented this here in Germany. We win all of the relevant, or most of the relevant networks test in mobile, 95% to be correct. We have 80% of our sites connected to fiber, and we are perceived as innovation leaders with services like Stream On or Entertain TV. So those are the starting point from which we start, and why we believe that we are actually uniquely positioned in the market. So what does that mean going forward, and how does our strategy fit to the overall corporate strategy that Tim has just explained? And you see the framework here. And we believe that there will be 4 areas where we want to actually dive in and drive the growth. First one will be the lead in customer experience. Secondly, leading in business, continue the strong growth momentum that we've shown there. Thirdly, leading in technology, solving the issue of what's our progression to an all-fiber network, and how can we build out and strengthen our mobile network position. And last but not least, what we call value transformation, driving efficiencies and more digitalization through our organization. Now, going a little bit more into detail and looking at leading in customer experience, what are the 4 growth drivers that we will address here? The first one, most important one, being convergence. Expanding our converged household penetration with Magenta 1, very strong brand here in Germany, and driving that success story that we've seen over the past years. Secondly, standalone mobile, really continuing on a lot of the success that we've had in the past by with our multi-brand approach and more for more. Broadband, TV, and wholesale, leveraging, as I just said, our better networks, our network expansion that we're having, and the unique propositions that we have here. And last but not least, service, driving lower churn and continuing to have low churn on the back of best-in-class service. Now, going to this in more detail, what does convergence mean? What does convergence really deliver for us? And what you see here is the results and the success story of Magenta 1 that we've done actually on the left-hand side, so you see the real numbers. So €9 per Magenta household in additional revenue, and that is after the discount that we've given of €10 of the commitment discount. You see significantly lower churn for our converged households, and you see significantly higher customer satisfaction. So what we want to do is actually expand the story, continue the success story, and go in our penetration of broadband households from today, 18% up to 30% in 2021, and at the same time driving a higher share of our revenue from converged households. Talking about mobile, I talked about the more for more strategy that we've deployed and a multi-brand strategy. The German market is a fairly segmented market. So you have segments of customers who are very willing to pay for quality. You have other segments of customers who are very, very cost conscious, really going to discount. So the way we look at this market is saying, well, there's actually very simplified 3 big segments. The one is what we call the premium segments. Customer really looking for quality, for service, and being willing to pay. This is presented mainly by the primary brands, and actually we are the market leader in this segment. We want to continue to build on this leadership position with innovative services like Stream On, Unlimited, and others. We want to differentiate through our handset portfolio and pricing, and also through our channel presence that we're having. There's a second segment, the Smart Shopper segment. We're very well positioned in the segment, again with a distinct brand, Kongster. Very, very online-focused brand. North of 50% of our acquisitions there are truly online. And we have built-yourself tariffs and innovative offerings here. And again, we believe we're very well positioned in this segment. The third segment of the market, which we call the discount segment, our strategy there is basically have a decent presence there, look on revenue stabilization and a balanced channel presence. Now, we've executed this strategy for the last couple of years, and again, we'll continue in this strategy going forward, even making our brands, our sub-brands, more distinctive and their value propositions even clearer for our customers. Again, on mobile, as I said earlier, we're looking at innovation and more for more. Innovation gives us the opportunity to say, hey, there's something new, and at the same time monetize what we've introduced. So the first step we've done a couple of years back was to say we'll go to a much simpler portfolio and SM&L tariffs, simplify the portfolio. Then on the back of that, use additions like Stream On to actually then get customers to upgrade and to go to the higher end of the tariffs. This has been very successful. Stream On has landed very, very well in the market with over 1 million customers now being on there. We've then introduced things like Magenta XL, the first unlimited tariff in the German market, etc. And as I said before, we're foreseeing continued revenue growth in the mobile market. We actually expect a CAGR of 2% in the coming years, and you all know we've shown 3.2% in the first quarter of this year. Going to broadband, why are we bullish on broadband? Why do we believe that we can continue with good broadband growth? The first one, as I said, is bandwidth increase. And Tim mentioned it earlier. Right now, if you look at the numbers, 2016, only 33% of our customers were able to get more than 50 megabits per second. We're currently about at 60-ish%. By the end of 2019, 95% of customers will be able to get more than 50 megabits per second. Many of them, actually the vast majority of them, 250 megabits per second speed. Again, that includes some hold-by potential. And with that speed comes lower churn. There's a high inverse correlation, as you can see here, between broadband churn and broadband speeds that are available. Hence, we believe that will drive lower churn. It will make us more attractive in the market, even against cable propositions. And as you can see right now, people are voting with their feet. We are actually very well positioned, even with higher bandwidth cable offers. And TV, again, is another supplement, and I'll talk to that now, which is our TV proposition. We believe TV as a core of our broadband and growth strategy. We will play the role of a content aggregator, but with smart investments. So we're saying we have a good strategy here. We have good exclusive content, which we bought, Handmaid's Tale, other things. We're going into own series productions, but not an enormous amount of investment, yet with smart investments in certain things. We've developed a brand of Telekom Sports, which drives exclusive sports on basketball and ice hockey and others. And we're certainly also improving the platform, having the most advanced and best platform that there is in the market. And as you can see on the chart here, we are currently the only major TV operator actually winning customers on a net basis in the market. Going to wholesale, and again, we continue to believe that our wholesale business will grow. And the growth in the wholesale business will come out of two core growth drivers. A, subscriber growth. And that subscriber growth will go in line with what we call high bandwidth footprint expansion. So we believe there will be continued subscriber growth for the foreseeable future in wholesale. And at the same time also ARPA growth on our access business. Why is that? Mainly driven from ULL into bitstream migration, so the customers who migrate from passive ULL infrastructure into active BSA, and that will drive, again, ARPA growth. And as you can see, that compounded, that leads to about a 2% CAGR on our broadband, on our wholesale business. Talking about service and how we will use service to reduce churn and also drive a leading customer experience. And a lot of that will be about using modern technologies, agile approaches, using big data analytics to be proactive about the customer interactions that we have. Using and leveraging self-service where it makes sense. Yes, we will have one app. Yes, we will have a lot of self-services that we'll make available on the app, and our aspiration is actually to drive 70% of customer interaction, to resolve 70% of customer requests through digital channels going forward. And also seamless service that we deliver, focusing on pain points that our customers have and massively reducing the number of complaints. We today already have reduced our complaint rate from 5% down to 4%. That's of all total contracts. We believe we can drive it down another 75% to 1% in 2021. And that will drive a significant increase in customer satisfaction. Going from the consumer business and how we lead there in the customer experience to the lead in business productivity in our B2B business. And I'm particularly proud of what we've done in the B2B business. As you know, 3 years ago, we launched what Tim called the Mittelstandsinitiative, so the German medium-sized business initiative for especially then. As you know, that is the powerhouse of the German economy, and we've actually been very successful in driving growth in that area. And remember, we are a market leader by far in the communication sector in that segment. We've grown not only in our core business, i.e. in telecoms, but we've also grown in businesses like IT solutions, business connectivity, or security, and we've added 300 million euros in revenue in those past years. And going forward, we believe we can add another €500 million in revenue into that business, continuing in what we call the Mittelstandsinitiative 2.0 by further growth in mobile and broadband, offsetting some of the inventory losses and hard migrations that we're facing with the IP migration in business, continuing with innovative services on M2M and IoT, and again, supporting agile work and cloud solutions through those. That will be a massive amount of growth again in this market, and we're well on track to actually hit that going forward. Moving from what we want to do in consumer and what we want to do in business to lead in technology. What are we going to do in technology? How are we going to address the issue of our fiber rollout? how will we deal with cooperation and co-investment models? What does it mean for a mobile network, and where will we drive network innovation? And starting with the discussion we've just had, what's happening on fiber built out in Germany. And what you can see on this chart is, on the left-hand side is what we call the finalization of our vectoring and super vectoring rollout. So by the end of next year, we will have completed all of our fiber to the curb and super vectoring rollout. And what you see on the left-hand page is the coverage that we'll achieve with that. 80% household coverage with vectoring, 70% of households with super vectoring by the end of 2019. Introduction of super vectoring already this year, and by the end of this year, already 15 million households being available with super vectoring on up to 250 megabits per second, and then also leveraging some of the potentials of alternative network operators on what we call whole buy, i.e. serving our customers through other people's active infrastructure, something we've started to do in areas like Cologne or the northwest of Germany. Now, on the right-hand side, you see how we look at the German broadband landscape. And you see, on the x-axis, you see coverage. This is the coverage of all the households that we have in Germany. On the other axis, you can see the bandwidth, i.e. how much bandwidth is available in the market in Germany in those households. And that picture shows our estimate of how this is going to look like by the end of next year. And what you see here is that obviously you have a certain amount of fiber to the home and building built out today already. You have a cable area about, as you know, 2/3 of the footprint. And then you have a second area, which we call the outside of cable area, but where you actually have vectoring and VDSL available, so minimum 50 megabits per second available. And then lastly, there's what we call the white spot areas, which is the areas where actually only ADSL is available, so 16 megabits and below. Many of those areas actually only having 5, 6, or even only 1 megabit per second. Now, this is how we look at the landscape. And partly, as Tim said, a large chunk of the population already by next year will have access to very high bandwidths. And we believe that will quench a lot of the discussion that's going on today and will allow us to grow on the broadband. However, on the political side, obviously there is an issue here that the equality of living conditions, as we call it in the German constitution, is not given by having people who are disconnected from the digital world. And hence, looking at how we look at fiber rollout, i.e. going beyond 2019 and beyond what we've planned, we said, well, you have to look at those areas more differentiated. First, the first and foremost pressure that's there, you have to address business areas. So business parks that are around in Germany, many of the businesses are there, they don't have the connectivity that we need. So we have committed and we have communicated already doing a rollout to those business parks. We will have 80% of those business parks connected in the early 2020s, and this is already going on today, and we'll address again a big issue about the Mittelstand, as I said earlier, the heart of the German economy. Secondly, from a political perspective, the white spots are very, very important areas. There's a lot of the noise and the pressure in Germany is coming from exactly those less than 5% households by the end of 2019 who will be white spots. We will address that white spot issue. We believe this will be a subsidy program by the government. Those programs have been going on for the past years, and we believe there will be significant subsidies available to actually build out in those areas. And we will compete for these subsidies as we today, Tim mentioned in Bavaria, as we do today with VDSL. Hence, we believe a significant amount of the investment there will come from public money. And then the largest part of our investments will be spending in what we call the cable area and outside the cable area in areas where, for example, we have good business opportunities because our market shares are low, where we have been overbuilt, or where we believe the rollout economics are very, very beneficial. We'll do this not only alone, we're open for cooperation and co-investment models. Tim mentioned earlier EWE-TEL. Many of you might not know them, but they're actually the largest alternative network provider in Germany with their own network. So this is a big guy in Germany, and we have collaboration with them. We've presented it already, and we'll notify it to the cartel authorities as we speak. Going from there, what does that really mean, collaboration? How does it work, and how will you let others share on your networks? The first, as I said, joint ventures. We will do joint ventures. EWE-TEL is our, if you want, our hallmark piece, the ones where we want to try how this works. We will jointly roll out an active network. We will share that infrastructure, and then we will jointly have access to that network, sharing the investment and the risk that is there. Secondly, we are ready and willing, and we do that already today, rent passive parts of the network, be that ducts, be that fiber, etc. And with many municipalities, we're in discussions today. We don't have to build. We just rent that infrastructure that is going on in a lot of the projects already, and we'll intensify that going forward. And last but not least, as I mentioned earlier, we are ready to buy access where infrastructure already today exists with a very fair and open model. Again, we have models in place today, and we'll intensify that going forward, allowing us, and if you want, in a form of commitment model, to actually share and benefit from infrastructure that has been built from others. In the cases where we operate and own the infrastructure, we will be open. We will be open for others to use this infrastructure, as we have been on our copper network. However, there's going to be slight differences, and there's been some very good indications of the regulatory authorities that say, hey guys, we understand that the regime for fiber investment needs to be different from the regime for copper. Hence, we understand that there's a higher degree of risk, and we understand that risk sharing needs to find a different form. So the model that we're proposing basically separates a fiber to the home or building network into two large parts. The first one we call here if you want, the connecting network until basically the border of the lot. We call that that network. We will rent out as part of a co-investment or commitment model as you know them today. We'll ask for a small upfront investment, and then we will rent out on the form of a bitstream access for a monthly fee, depending on the size of the commitment that you've bought and where we are. Secondly, and this is different from the models we have today, the network from the border of the lot into the building and into the individual apartments, we will actually ask for a co-investment individually per line that will be connected. Those costs in a fiber to the home network are actually a substantial part of the cost of the network, and we will ask somebody who wants to use our network to share that kind of investment in a very fair form, and hence they're sharing part of that risk and reducing our exposure that we have there. We will also insist that if somebody wants to have access to our fiber network, we get access to their network on reciprocal terms. And we're willing actually to buy network capacity on the model that we're offering, and that gives us a high level and degree of trust that we believe this is a fair model which has a good chance of being approved by the authorities. What does it mean for the rollout? What do we plan in terms of rollout? First, and Tim mentioned it earlier, we're not going to invest indifferently. We're going to look at the investment, we're looking at rollout efficiency, we're looking at the payback that we're getting. And just to give you a figure of about where we are, we're talking about 1,000 euros per home passed. That's our average of the averages. Again, if you look at some of the areas in the white spot areas, so the white, what I showed earlier, where we have no coverage, cost can go up to 3,000 to 4,000 euro per home passed, but again, we believe that the vast majority of that will be subsidies, so that even there, our investment will not surpass that number. Secondly, we're looking at a smart area and technology mix. Where are we going to build out between B2B areas, competitive areas, fiber to the curb areas, and white spots? So we're really selecting the right spot where to invest. And we'll also use an efficient technology mix. Yes, we will use FTTH and we will use FTTB, but we will also start to use wireless to the home as a complement to our fiber network. And Claudia will talk later more about how we're going to do that and what potential do we believe it has. We believe it can be an accelerator to our rollout. We believe it's actually feasible for 20 to 30% of homes as long as you have, obviously, fiber close to it, because the backhaul will need to be done on fiber. Already also talked about smart corporation and co-investment models. And then again, how fast do we roll out? And we've mentioned earlier, we're ramping up to 2 million households per year in the year 2021. And with ramp up, we mean we will not start in the year 2021. We will start significant investments into fiber to the home as soon as we have leeway from the end of our fiber to the curb rollout, which will be in 2019. So in 2019 already, you will see us investing into fiber to the home, and you'll see significant numbers again ramping up then to the 2 million in 2020. And again, that is the plan. We talked about how we do the A alone, and secondly, as part of our partnership models that we have out there. Then, going from the broadband networks and the fiber networks to mobile. Mobile, I talked earlier about we want to maintain our network leadership. We want to make sure that we can command a price premium for the service that we're giving, and hence, how can we do that? We already have today 80% of our sites connected to fiber. We'll continue a significant rollout of our sites, 27,000 today. Tim mentioned earlier we will roll out approximately 2,000 sites per year, going up from 500 today. Again, those are macro sites. On top of that is small cells that we'll be using, and we'll continue to roll out our LTE POP coverage. We're today market leading, and we'll even improve that going forward in 2019. What are we going to do to make sure that not only coverage is good, but also the speeds are there? We can maintain our speed advantage. As we said, the one obviously is about spectrum. The secondly, obviously, is about the number of sites that you have, the fiber backhaul that we're using, new antenna technology with massive MIMO. Again, Claudia will speak into that, mixing in 5G, delivering high speeds to our end customers, and also tuning our network. An understanding in a much more customer-driven way of where are the network pain points. So we're very intensively looking at specifically highways and railroads. Where do we have the necessary performance gaps? Where do we have call drops? How can we quickly invest and understand and tune our network so that our customers' network performance is even better than the one that we have today? That also obviously is not only outdoor, it also includes indoor technology so that we can maintain our leadership, as we've said. We will obviously be in 5G. We want to be market leader in 5G. 1,000 times higher network capacity. Claudia will talk about this. Lower latencies, higher speed, increased efficiency that we have. The potential not only for innovative solutions like campus networks or things that we do in the harbor in Hamburg or other areas, but also then our ability to serve wireless to the home faster, maybe cover gaps where we can't roll out fiber as fast as we want to, or roll out to certain areas which aren't directly covered by that. We believe, again, there's a significant case for that for us going forward on that area. If I then go from the mobile networks, we talked about network transformation, now talking about value transformation. Value transformation, how are we going to manage to take out 750 million in indirect cost? And we're looking at basically 4 areas that we're working on. The first one is automation. Automation using data analytics, smart processes, we believe we could take out about 300 million euros. Operational excellence, things like predictive servicing, understand where problems are going to happen, maintenance, less complaints, reduce the number of complaints, process automation, another 250 million. Platform retirement, switching off all platforms. We talked about IP transformation earlier. Again, we will be finished with the IP transformation on the consumer side by the end of 2019. On the business side, by the end of 2020, there will be significant savings, not only coming then, but they're already coming today, but they're being offset by some migration efforts. But we will see the benefits of that flowing in this time frame. And last but not least, the change of the way we work. We talked earlier about one of the issues why we did not deliver all the savings we promised in the last Capital Markets Day was issues we had with IT transformation. We believe, and we've started to embark on a different way of delivering IT, taking significantly lower risk, delivering significantly faster at lower cost, using agile technologies, and changing the way how we operate in the company. And we're going to go through those elements in a little bit more detail and talking about automation. And automation for us is a lot about bots. Creating bots, we today have 1,500 bots operational already today, handling 35 million transactions already in 2018, or will be handling in 2018, handling 20 million transactions today. We believe you can massively scale this until 2021, and we're investing heavily in that area. Now, these bots don't necessarily directly interact with your customers. What we're also looking is obviously at what we call AI and digital assistants, i.e. the direct interaction machine to human that we're using, for example, in chatbots or an IA-supported chat. You can see we do today about 300,000 transactions. We're probably us again there seeing a huge potential going forward. And we're using innovative services like field service apps, et cetera, where customers are actually able to track the technicians that are coming, making sure that there's bigger efficiencies, that they're prepared, that we don't miss appointments, et cetera. On operational excellence, improving our service processes, 250 million that we believe we can save. The one is obviously providing forms of digital interaction with customers. That will be our app. But also we have native web pages that we use today where we believe our customers can, as I said earlier, do about 70% of their requests digitally direct if they want to. Data analytics, understanding better what is happening, where are problems occurring, how can we make sure that we address an issue when it's emerging, maybe even prior to its emerging or right after it has emerged, creating a lot more transparency and guiding our teams and processes by that. Training of experts, looking at service quality and really focusing on first contact resolution and to understanding that we do not reiterate problems or permutate problems in our organization, but get them right the first time, and we're aiming for over 80% of that resolved on the first day. And last but not least, investing into product quality. Product quality being at the core of our customer experience and really focusing on getting the flaws out of our product. And we're creating and focusing on now dedicated end-to-end teams who will look at product quality. What's our ambition? Just looking at complaints, as I said earlier, between 16 and 21 to reduce the number of complaints, for example, by over 84%. Platform retirement, and we've talked a lot about IP migration, and Tim earlier talked about the example of the BNG transformation. Without getting too technical, what you can see here between the legacy architecture above and the new architecture below is significantly simpler. It's not only significantly simpler, it's more scalable, it requires less interactions, and hence it's much easier and cheaper to operate than the legacy infrastructure that we have today. That's part of our BNG migration, what we've done so far. Also, we will change our IT architecture. We are already doing that. We're going to a microservice-oriented architecture, open source software, much more smaller, manageable pieces of software changes than the big programs that we have done in the past. We focus a lot on a decoupled architecture that actually allows us to be more agile in the way that we operate. And we have introduced and are introducing significant amount of agile and DevOps methodologies into our operation. Talking about organization and lean and agile, that will mean change to our organization. It will mean change to the way that we operate. And again, we're embarking on this already now. We will consolidate management functions. We will reduce the hierarchy of our organization to focus on accountabilities and fast decision making. We will introduce a much more product-oriented tribal organization, a new form of organization that looks at end-to-end quality and features of our products, and we will build skill-based chapters, a much more agile organization and easier to change and deploy organization than we have today. We'll also significantly invest into agile development, base our software and products on that, improve our time to market by early and fast prototyping, strong usage of AI and data analytics, and then obviously that will mean reskilling a large part of our organization, introducing this agile methodology, and we've already created an academy for that. We've created training programs, and we're in the midst of actually that interaction. And our aspiration is to significantly enhance and enlarge the number of projects and development projects that we're doing using agile methodology and flexible delivery. Now, what does it mean if I summarize all of that in a financial outlook? We are looking at revenue growth over the next years of above 1%, translating to an EBITDA growth of 2 to 2.5%, with stable cash capex and stable special factors cash, then hence delivering an increased cash contribution of 4 to 5% annually. If I look in more detail at what does that mean on all the other aspirations that we've given you, again, growth in mobile service revenue of 2%, broadband revenue CAGR of 3 to 4%, Magenta 1 share or Magenta 1 share of our broadband households of around 30%, growing our B2B business by 500 million euros until 2021, ramping up, and with ramping up I mean not starting but ramping up to a 2 million per year run rate in fiber rollout, and reducing our indirect cost by 750 million. And that's the end of my presentation. I thank you very much, and I'm looking forward for your questions.